Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for Monday, May 14th, 2018. Well, hey everyone, I hope you all had a fantastic weekend. You're ready to get back into the trading week. We just had a great week last week with the bulls being very, very strong, pushing the markets higher, significantly higher as a matter of fact. And so let's take a look at what we can maybe expect this week, or what the market looks like, how it's set up for this week. Remember, I don't do any of these videos with the idea of predicting the direction. I'm looking at the charts without bias, trying to get a idea of how I want to approach the market for the week. And I'll tell you, I want to approach the market today with just a little bit of caution. First off, we have, if we take a look at the Dow Jones, the Dow moved. If you watch right over here in this upper left-hand corner, when I measure this price action right here, measure from that low last Thursday, where it looked like we were about ready to fall off the world, up to where we closed on Friday, we're up over 1,200 points. That's a significant move in just 7 days. And it's easy to kind of forget just how far we have moved when we're finally, the bulls are in and everybody's making money, and we want to see that bullishness continue. But let's kind of take stock of where we are here, and let's remember that this level right here, 25,000, is one of those big round numbers that's kind of an important psychological number for the market. That could easily play an important point as resistance. Now, that doesn't mean that we're going to necessarily just collapse from here, but a little pullback or consolidation would be very normal at a place like that. So let's go back and let's take a look at the diamonds. And you can see, if we throw the moving averages on that chart, we have a really good, look right here, 50-day moving average, the blue line, the orange line is the 34 exponential, the 20 moving average right here is a simple moving average, and this black line is the 8 exponential moving average. You can see all right there we have a bit of a moving average squeeze that is set up. So any rest or pullback, I don't want anyone to fear this, but I want you to be a little bit cautious about chasing into a 7-day run. This morning we're showing a gap up open. Okay, so we're going to push that upper limit this morning, but it wouldn't be at all surprising if that meets with a little bit of selling or a little bit of cautiousness with the market. We could easily see the market either consolidate here or have a little pullback. Now, both of those would be very, very healthy, and a pullback that holds those averages in there could easily set up more upside in the market. So kind of keep that in mind as you're preparing for your day. One of the things I hate doing, because I lost a lot of money doing it years and for years as I was learning this craft of moving toward that full-time trader status, where I've been for 13 years now, is chasing a 7-day run like this and buying an opening gap. Often you get what's called a whipsaw in those situations, or you've heard them called pop and drops, where the market pops up first thing in the morning and immediately is sold into. Now, I'm not suggesting that's going to happen here. I'm just suggesting the possibility does exist. As we hit that resistance level or come very close to those resistance levels in the market, just don't be surprised if the bears aren't going to be wanting to defend, at least for a while, that area. Okay, so watch that closely. Let's take a quick look at the spiders. SPY, very much similar situation, moving up strongly, approaching this resistance level. Now, this isn't a big, strong resistance level, but it is when you combine it with the Dow and what I'm going to show you in the Qs and the SPY. We just have to be a little bit cautious as we approach those resistance levels. If we take a look at our moving averages, we have a similar situation here with that moving average squeeze kind of setting up in this area. So a little rest or a pullback would not hurt this market at all. So I don't want anybody to think that I'm thinking bearishly on the market, because I'm not. I'm just suggesting that after such a big move up, a little rest or a little pullback would not be out of the question. Let's take a look at the Qs. Now the Qs is in an interesting place, having risen so much so quickly here. You can see that the Qs is now approaching this resistance high of January. We're very, very close. In fact, we are less than 3 3.75 points, I should say, of creating a new record high print or close here in the Qs. So we don't have to move that much farther to maybe set that new record high. But watch those resistance levels, because we could easily see a rest, just a consolidation, or a pullback. Remember, trends exist for a reason. Those trends often become the place where we respond back to. Now we could consolidate over there, we could pull back to this, but that would be the place where we would more likely see a solid response higher. That doesn't mean we can't break through here, because we certainly can. We could break through and then pull back. And that's okay too. Just remember that trend has a purpose, and it's not at all, would not be at all surprising to see a little bit of rest or a little bit of pullback. Charts normally return to their trend. Okay. Let's take a look at IWM. Now IWM being the strongest index of the 4 indexes out there right now, pushing up toward that resistance high. We have less than 1 point. In fact, 3/4 of a point is going to put us in a new record high situation here on IWM. But let's also keep in mind, we have moved up very, very sharply here, and a pullback or a consolidation would not be out of the question. We're a long ways away from our trend here. And notice how we've moved. When we get too far away from that trend, we come back for a test. So that doesn't mean we have to drop for that test. We could consolidate and let that trend catch up with us. All right, so kind of keep that in mind. Let's take a look at the VIX. The VIX has been just moving nicely lower, running that volatility down. And now we're getting really, really close to testing this long-term trend as support. So let's keep an eye on that. We could pull back down into that and bounce off. So we're right at that point where we could go either direction. We could break through that resistance, or we could easily see that consolidation or pullback. So you're going to want to be a little bit cautious as you approach this market this morning, showing a gap up open. Make sure you've got your stop losses in. Make sure you're protecting those profits. Don't let those winning trades turn into losing trades. Let's take a quick look at T21. 22. T21.22 is a 4-week new high, new low ratio. And you can see there's also a little bit of a caution flag showing here that we're up here in this reversal zone. And this doesn't necessarily mean that we're just going to immediately start moving down. We can go sideways here, and that will move this this line lower. So we don't have to necessarily just really pull back. And so please don't anyone think that I'm trying to predict any kind of bearishness. I'm not. I'm just pointing out that we're at that point where a little bit of caution should come into play. So a little pullback could easily occur at this area. Let's take a quick look at the economic calendar. The economic calendar doesn't have much going on today. We just had a couple Fed speakers, and we've got bond announcements today. But let's keep in mind we have some big reports coming up this week. And what's not on the calendar is we have some news events that we have to be aware of. First, Speaker Ryan has imposed a Thursday deadline on the renegotiation of the NAFTA agreement. I think it's kind of a soft deadline that could be moved, but that deadline is out there. And of course, as they work on bringing together that agreement, there could be a lot of news spinning out of that could affect the market. Right now, I think by and large, this new agreement is being received by the market as positive. So a bullish sign for the market if they can achieve it. But again, that's the big if they can get it completed. So kind of keep that in mind. We have that going on. Also, we have, I think this week we begin the trade negotiations with China. So as you know, the news likes to spin this stuff out in a big way, creating quite a little bit of drama. So we'll want to watch that closely this week and be prepared for a little bit of news volatility this week. On the earnings calendar today, we have quite a little bit going on the earnings calendar the first couple of days of this week, but we do have some important reports all through the week. So today we have had about 188 companies on the calendar, and they're already starting to come in. We have over 200 companies reporting on Tuesday. And then we drop off really sharply as we're really winding down second quarter earnings. But keep in mind, we have reports this week that do have the potential to move us around. We have Walmart, we have Cisco, we have Macy's, we have Dick's Sporting Goods, we have Home Depot. And notice that a lot of those tend to be are retail, and you combine that with the retail numbers this week, and we could see some movement around. So there's a lot of important earnings, and Campbell's Soup is later this week as well. So keep in mind that earnings still need to be paid attention to. We need to focus on those earnings reports if we are holding those companies or thinking about buying them, and also consider how they might affect the overall market. So with that, everyone, I want to wish you a great day and great profits. And if this is the first time you've seen this information, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons and drop that note if you feel it's worthy. And also, please feel free to share this video with any friends and family that you think could benefit from it. I want to wish you all a great day, great profits. We'll talk to you all bright and early tomorrow morning. Take care, everyone.